What if you didn't have to wake up to an alarm clock anymore? What if your income kept rolling in, even if you stopped working? In this video, I'll show you an investment that could potentially replace your job income. And if you stick around until the end, I'll reveal a powerful yet underrated tool that could make your journey to financial freedom much easier. I'm Robert, and welcome to The Alternative Investor. Let's dive in. The traditional path, work 40+ hours a week, collect a paycheck, save for retirement, keeps most people stuck in a cycle where they're always trading time for money. You can work for decades, but unless you're actively clocking in, the income stops. There's no financial freedom in that model. To escape the trap, you need to stop thinking like a worker and start thinking like an owner. That means building income streams that pay you regardless of your time or effort. The key is finding the right type of asset, something that pays you whether you're working or not. So, what kind of investment has the power to replace a full-time job's income? The answer is dividend-paying stocks. These are shares of companies that regularly distribute a portion of their profits to shareholders just for holding the stock. It's not speculation, it's cash in your account, month after month or quarter after quarter. With the right mix of reliable, high-yield dividend stocks, you can build a portfolio that pays you a steady passive income, one that could eventually match or even surpass what you earn at your job. This isn't about striking it rich overnight, it's about consistency, reinvestment, and long-term growth. Let's break down the math to see how this works in real life. If your goal is to replace a $3,000 per month paycheck, that means you need to generate $36,000 per year in passive income. Now, if you invest in dividend stocks that yield an average of 6%, you'd need about $600,000 invested to hit that number. That may sound intimidating at first, but here's the good news. You don't need that amount today. You can start with much less and grow your portfolio over time. By reinvesting your dividends and consistently adding to your investments, compound growth will help you reach that number faster than you think. Let's talk about some real investments you can look into. First, there's Realty Income, known as the monthly dividend company. It pays investors every single month and has increased its dividend for nearly 30 years. Next, Pfizer is a pharmaceutical giant with a strong dividend history, offering stability and consistent returns even in uncertain markets. Verizon is another strong candidate. It operates in the defensive telecom sector and offers a high yield, making it appealing to income-focused investors. Each of these companies has a proven record of rewarding shareholders with consistent payouts. You don't need thousands of dollars to get started. Thanks to platforms like Robinhood, M1 Finance, and Fidelity, you can now buy fractional shares of stocks with as little as $5. Even small, regular investments can snowball into something meaningful, especially when you reinvest your dividends. The earlier you start, the more time you give compound interest to work its magic. It's not about how much you invest at first, it's about consistency and time in the market. Now let's talk about how long this actually takes. If you're investing regularly and reinvesting dividends, you could reach job-replacing income levels in 10 to 20 years, depending on your contribution amount, dividend yield, and market growth. But even before you hit your full goal, you'll start to see progress. At first, it might be $20 a month, then $200, and eventually, maybe $2,000. Every dollar you earn passively is one step closer to complete financial freedom, and proof that this strategy works. Earlier, I mentioned a tool that could make your journey easier, and here it is, the SCHD ETF. SCHD stands for Schwab US Dividend Equity ETF, and it's one of the best ways to build long-term dividend income with minimal effort. It holds a portfolio of high-quality US companies with strong dividend growth and solid fundamentals. Instead of trying to pick individual stocks, you can own them all through one investment. Diversified, tax-efficient, and historically outperforming. If you're just starting out or want a simple set-it-and-forget-it option, SCHD might be your best friend. If you're ready to stop working for money and start letting money work for you, smash that like button, subscribe to The Alternative Investor, and let me know in the comments. What's your financial freedom number? And when do you want to hit it?